Welcome to this month's market update. I'm joined today by KC Lowe, Senior Consultant with Frontier Advisors. Hi KC.
Wayne.
There's been a lot of market volatility in recent weeks. Talk us through some of that.
So in January, February, we had the concerns over higher interest rates and inflation. In more recent weeks, it seems like the volatility has been driven by the trade disputes between US and China. Now, there's a lot going on right now, but as of right now, there's probably 4 key policies that the US have put forth on trade. The first one is a 10% tariff on aluminium imports, a 25% tariff on steel imports. The second policy is a 25% tariff on about $50 billion worth of Chinese imports. The third thing is that they put some restrictions on Chinese investments on critical US industries, which includes technology. And the final thing is that the US is taking a case against China to the World Trade Organization over intellectual property theft. So there's a few things going on there from the US side. In response, China have proposed their own tariffs on about $50 billion worth of US imports into China. Overall, this have implications for the global growth outlook, but as of right now, none of these policies have been implemented yet from either side.
So staying in the US, there's been a recent Federal Reserve meeting, a little bit of action to come out of that?
Yes, so despite the concerns and the global trade disputes happening right now, US growth remains strong enough to convince the US Federal Reserve to raise interest rates again. So they raised it by another 0.25%. So US interest rates is now in the 1.5 to 1.75% range. This is the 6th hike they've made since this cycle began in late 2015. The interesting thing about this particular hike, though, is that US interest rates, or short-term interest rates, are now above the Reserve Bank of Australia's cash rate, which is 1.5%. This has implications for our financial markets and economy. So one example of the implication is, since historically Australia had higher interest rates, that has attracted foreign investments into Australia, supporting the Australian dollar. So with the interest rate situation now reversing, we should see some downward pressure on the Aussie dollar.
So leaving the US aside for a second, what are some developments happening elsewhere around the globe?
So broadly speaking, global growth is picking up, including Europe. But the interesting thing with European growth is that it hasn't been spread evenly. So if you look at Euro area unemployment rate, that has been declining. Core European countries' unemployment rate is declining. So you look at German unemployment rate, it's below where it was in the early 1990s, so around where they had the reunification. But if you look at peripheral European countries, for example, Spain, their unemployment rate has been declining, but it's still at a very high level. So it's still at 16.1%, still quite high.
Sure. Okay, so plenty happening, plenty for you to stay on top of. Thanks, KC, and thanks for watching this month's video.